to the day of the ruble, so to speak. Before we get started, let's have a quick look on the disclaimer. And this morning we already had out the UK CPI, which was a little bit less, not as good as expected. German ZEW was better than expected. And the market index on the PMI flash was around about okay. Eurozone balances also touched better than expected. German PMI December flash was better than expected, and the French not as good. Well, we expected that best basically, but it was a little bit worse than expected. Shanghai Composites closed this morning at the highest level since 2011, and the Nikkei was obviously down, also due to the risk-off scenario which we're basically facing in the markets. I just take this one off, and we're gonna have a look at the Russian ruble. What happened there? We had the obviously the whole issue in Russia about the Ukraine, and we already had this basically. Let's look at the daily chart. Let's have a look at the daily chart. Here we are. And basically had since August, since the sanctions started, always a continuous decline of the ruble, and now with the oil falling all the way down, especially through $60 on the Brent, and $40 is basically production cost, and Russia, the ruble really got hit. The central bank increased interest rates by another 6% to 17%, but it didn't do anything. So basically, there's a lot of selling in the ruble. Though also, and just to let you know, which is very important to know, and leads us to the issue in our classes, how to choose the right broker. A lot of brokers are basically cut down ruble trading for their customers already today, and some, one of the bigger ones, especially like Dukascopy, FXCM, already noted that they cut down the ruble trading by tomorrow, because obviously spreads are pretty big. Let's have a look on the ruble spread we have here, 79.9430 to 72.36, so it's quite a big spread, which we also have here obviously at this broker. Nevertheless, how did it look and take off to the other markets? Obviously, with the risk, with the equity markets being under pressure, this risk-off scenario first of all hit the dollar yen. Dollar yen went initially way down, all the way down to 115. Let's have a look on the daily dollar yen, and we see basically we started here the rise around the 109.50 level all the way to 121. I mentioned this a couple of times, and the market managed basically to run all the way through down under the 38.2 Fibonacci level, and went all the way back down to the 50 Fibonacci level, which is here from this up move. And there we found some, here we are, 50 Fibonacci level. There we found some support, and the dollar yen basically retraced back all the way to the 38.2 Fibonacci level of this big, 38.2 Fibonacci level of this big move, and which is also the 23.6 Fibonacci level of the move from 121.85 to the low seen today, 115.50. Anything to do? Any trade ideas? Not really at the moment. It's a question for wait and see in dollar yen, the same as we have also on cable. We see the high volatility, and the market basically finds support in cable around the 156 level yesterday, went all the way back up again close to 158, and comes off now again to 157. Just simply sideways high volatility, and this is going to remain an issue up until we have the FOMC protocol tomorrow. And we have the same odds in euro dollar, basically trying to break out on the upside, as we did not manage to break down on the downside. And here we are on the 50 minutes. Let's look at the daily chart again. Let's say hourly chart makes them much more bigger here. So basically volatility in a sideways market. Only if we are really moving up, and I'm just taking up the daily chart here, if we basically get going about the 23.6 Fibonacci level, which comes in about 126.50, only above that one the market basically saying, or we go above the 126.05 to start off with, but then major resistance this one. But only above that, euro dollar is going to start rocking to the upside. and has really potential to go all the way to 129, another 300 pips. Up until then, top end of the range, sellers going to come in the market. We see here again, and here is the bottom end of the range. So we're going to be hooked or fixed between basically 125.75 on the upside of the range, marked by these levels basically. And here we can see this already at 123.50 level, where we have strong resistance and support basically all the way down between 124.05 to 123.65. So there's nothing to be said on this one. No picture has changed. Everybody's waiting for the Fed, which started today. Their meetings already. Interesting enough, on the Aussie side, we saw basically relatively stable markets. The markets didn't do a lot. I mean, the Australian dollar really didn't do a lot. Hovered around 50 pips trading range basically so far. The whole day long. Here we are on the 16th. You see the area of 82, 10, 15 was supportive. Now we're coming down off a little bit, and the upside was finished basically at 82.50, 82.70, just in a quick bounce, but basically 82.50, 82.60 on the top. So basically a 35-40 pip trading range. So the big move on the day was basically no one else than dollar yen. Keeping in mind, dollar yen is basically coming off now approximately from 121.80 down to 155.60, close to 600 pips. And as we hit the 50 Fibonacci retracement here on the daily chart, this is really substantial. If the market can stay above this one and really stays above now 117.20 level and closes the day above 117.20, 117.50 level, if not even 117.80, that could basically mean that we have a resumption on the uptrend, but this remains to be seen, depending really on the Fed. It might be the case that the Fed tomorrow, based on the current action on the ruble and the risk of political instability, because don't forget, Russia is a superpower with atomic weapons, etc., that the Fed plays it safe and basically doesn't want to rock the boat and strengthen the dollar further. All right, so it might be that in the wording tomorrow the Fed is going to be very, very lenient and more dovish. The same token, we then see maybe a decline on the interest rate expectation, so we have a dovish signal into the market. And in the press conference, maybe Janet Yellen is going to say something like, well, although we are more dovish on the statement, we are very closely watching the market, and we will quickly move if we see the need, etc., etc. You know, for the simple reason that they don't want to really kill the ruble any further, but to avoid political instability on the other side. So it's going to be very, very interesting. It's getting political in the market. Nevertheless, gold basically is just also shopping around. You know, it went as high as 12.20, back down at 11.90. So we came in 11.90 as high, down, a sideways market. So basically nothing really big under the sun, to speak. Tomorrow morning in New York time, we will have more or less, I would think, the same kind of levels until tomorrow evening at 1900 hours GMT, which is approximately 2 o'clock New York time in the afternoon. We're going to have the protocol, and then we're going to be live again here on this session and have a look where the market's going to go and see how the market's going to react to Mrs. Yellen's statements in the press conference, which is going to follow the protocol, the release of the protocol. And let's close the shop today with basically last picture on the ruble here on the 1 hour chart, and let's see what's going to happen.